Welcome, Tradespooners, and this is for today's pick for February 7th, 2014. We're looking at short Sherwin Williams, ticker symbol SHW. Taking a look at our proprietary pick ratings on the risk-reward, we're at a 2, which is on the low end of the curve, so we want to come in with some little bit of higher risk perspective on this particular pick. Value momentum is also a 2 as well. We're going to take a look at the price action, and we're going to see that the price closed at 179. That's the night before the pick. The 52-week high is at 198.47, and the 52-week low is 153.94. Now, for you options traders, we have been seeing that volatility has been off, implied volatility has been off its highs. As a matter of fact, it's about 30% higher off of those 52-week lows. For the strategies that we're going to look at on the options side, the return on capital is 55%. And the probability of success, as you can see, you can hover over the question mark if you're wondering how we came up with that, is at 60%. And the estimated movement analysis coming into the expiration of 2/22 is at 450. So let's take a look at the picks. Selling short stock, SHW at 179.19 or better. Now our target gain is going to be $25 higher, which is roughly going to get us out at $205 on a buy stop. That's if it goes against us. On the downside, we're going to take profits. In other words, if the stock starts to pull back, we're going to take profits $25 lower, which will roughly get us out at right around that 154 mark. So we want to keep an eye on that, and we're going to put a buy to close below our entry price of 179, roughly around that 154 mark, and use very prudent capital management on this. In other words, size your position somewhere between no more than 3 to 5%. And again, looking at these low risk-reward ratings and value momentum, you might want to even curtail that a little bit more. I would take that sizing also under consideration when you're looking at the options trade. Let's take a look at that. We're going to buy the February 180 puts. We're going to put in a limit price of $3.90 or better. When we are filled at 390, or if we are filled at 390, what we will do is we will put a target gain price $3.90 above our entry price, which roughly is going to get us out around $8. So you put a sell limit right around between $7.90 and $8, and that would be good till cancel. Now we will risk the $3.90 that we're paying for those puts, or $390 per contract. So please use prudence when you're sizing this position. The option spread trade, we're going to be actually doing what's called call credit spread. And for you new Tradespooners or you traders out there that have never done credit spreads, use the virtual trade component to start building out your, first of all, education, understanding, and knowledge of this particular strategy, but also develop your risk tolerances and objectives, in other words, so that you understand what your risk reward is. In this case, we're looking at a $5 call credit spread, and this is a bearish position. We're going to sell the 180 calls and we collect 270, so $270 per contract that we sell. Now we're going to cap off the risk to the upside. In other words, if the stock does start to move up and go against us, and we're going to cap that off at $185, or we're going to buy the $185 calls for $1, which means our net credit or total profit potential is $170 or $1.70 per contract. That will be realized if the stock is below 180 at expiration. Our maximum risk is going to be the difference between the strike prices minus the premium we receive. So in this case, it's going to be $3.30 per contract. Now what we're going to do is we're going to put a buy stop above the entry price of $1.70. Specifically, we're going to put it in at $3.40. If this spread is trading at any time between now and expiration $3.40, we will trigger a buy stop limit to buy that spread back at $3.40 or better. Now taking a look at the stock chart, you can see that Sherwin Williams has been under pressure, but recently has found a little bit of a base here and has popped here. We want to keep an eye on this price action, and so again, that's why we're also discussing watch your sizing. Key stock events, we have seen that they have missed their analyst estimates for quite a few months here, actually years. The stock is trading well above what its intrinsic value is. And again, we see that the stock has been in a downtrend, but firming up here. So we want to take a little bit more of a tempered perspective here. And you'll see that the financial results and news and commentary is listed here as well. As always, if you have any questions or considerations, you need any help, email us at info@tradespoon.com.